Hey everyone, in this video, I'm going to answer where I think Symbotic stock could be by the end of this year. The robotics automation company is making traction with one of the largest retailers in the world, Walmart, and that's expanding doors and opening doors for Symbotic for the future. So in this video, I'll highlight where I think the stock price could be by the end of the year. So let's jump right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Alright, so one of the numbers I'm going to need is Symbotic's current stock price, which right now, as of this recording, is trading at $48.37. If I go back 3 years, you can see that this stock price is up meaningfully off where it was in July of 2022. So it has been volatile, but currently trading at $48.37. I'm also going to need Symbotic's forward price to earnings ratio. As of this recording, that is at 92.38. According to this metric, Symbotic is relatively inexpensive. It's on the lower end of this valuation metric going back to April of 2023. So we don't have much data for this metric, but the data that we do have, the current valuation is near the lower end of where Symbotic has been according to this metric. I'm also going to need Symbotic's next year earnings per share estimate. And as of this recording, the analysts on Wall Street that are following Symbotic stock, they think it's going to deliver 43 cents in earnings per share next year. So when we're using the forward price to earnings ratio, we need next year's earnings per share to use this valuation metric. Interestingly, the analysts have been decreasing their earnings per share estimate for Symbotic stock. 90 days ago, they thought it was going to deliver 60 cents in earnings per share. 60 days ago, it was still 60 cents. And then 30 days ago, that dropped to 53 cents. And then 7 days ago, it dropped to 39 cents before rising to 43 cents today. So over the last 3 months, analysts on Wall Street have become more pessimistic on Symbotic stock. Now, that remains to be seen what it will deliver in earnings per share next year, and nobody knows what's going to happen in the future. These are just a collection of analysts on Wall Street that are following Symbotic stock, and this is what they submit, their best estimate of what they think its earnings per share will be next year. All right, so now that we have the numbers, we can start with our valuation forecast for Symbotic stock price. If it does indeed progress and is on pace to hit 43 cents in earnings per share, as Wall Street analysts estimate, and the price to earnings forward remains at 92.38, then the stock price could end up at $39.72 at the end of the year. Of course, investors in Symbotic stock would be disappointed in that, because that would be a decrease from the $48 per share it's currently trading at. So in order for Symbotic stock price to increase, one of two things needs to happen. Either its earnings per share estimates need to increase, or the valuation multiple needs to increase. So if the valuation multiple increases to 110 from 92, and keep in mind now, a forward price to earnings of 92 is already way above average. The average stock in the S&P 500 is trading at a forward PE of 18 to 22. So given Symbotic's growth prospects, it deserves a premium, admittedly, but does it deserve this much of a premium? That remains a question mark, and you're expecting an increase in that premium? That's a really questionable assumption. Still, let's see what will happen if the forward PE increases to 110. Then the stock price could be at $47 per share by the end of the year, which will be still down about $1 from where it is today. So in order for Symbotic's investors to make a good return on investment, this forward PE has to really increase meaningfully, or the earnings per share has to increase meaningfully. One or the other, or a mixture of both, needs to happen, because at current estimates and current valuations, the stock price is expected to decrease over the year. Now, if the PE forward were to drop unexpectedly, then the stock price could fall to $32 per share, a roughly 33% decrease. If the PE forward was to fall to 60, then the stock price could fall to $25.80. So in my opinion, I think this PE forward needs to increase closer to even 120 wouldn't be a sufficient return on investment, because a $3 increase on a $48 stock, I don't think Symbotic stock investors would be happy with that return on investment. Remember now, Symbotic is an above average risk stock, right? It's in the growth stages. It's still losing money on the bottom line in 2024. And so it's an above average risk investment. When you're making an investment in an above average risk stock, you want an above average return. That means at least 10% rate of return on an investment for Symbotic stock. That means you're looking at something at least $52, $53 by the end of the year, and 51.60. I guess that would be okay. It would almost be there. But, realistically, I think investors would look for a forward PE of 130, a stock price rising to over $55 per share to receive a satisfactory return on investment, given the elevated risk you would be taking with Symbotic stock. So consider that. In order to make a return on investment sufficient for your risk in Symbotic stock, you would need an increase in either the multiple or the earnings per share, something I don't think is highly probable. That's why I do not have Symbotic stock rated as a buy. I have Symbotic stock rated as a hold, a wait and see, a stock you put on your watch list and hope to catch on the dip, to hope to catch it when there's a big stock price decrease so that you get in at a lower price. And then if the estimates remain the same and the price is lower, then your return on investment potential is much higher because you're getting the stock at a better price. But as it is, I don't have the stock rated as a buy. And given the upside versus the downside here, you can see why that's the case, right? You can see why it doesn't seem very attractive at current valuations. Now, admittedly, the company has excellent prospects, right? Its robotics technology is saving companies very, very significant sums of money, especially as wages are increasing. The company has a significant backlog. It has a major strategic investor in Walmart and a customer in Walmart. And so its prospects are excellent. But that being said, you can see it already in the valuation. So it's not like those excellent prospects are a secret to anyone in the market that's investing in Symbotic stock. It's already trading at a premium valuation, forward PE of 32. So it's no secret that it has excellent prospects, and you're not going to be the only one that knows about these excellent prospects. It's already, arguably, in my opinion, it's already more than priced into the valuation. So it needs to even go above what these excellent prospects are to deliver a good, sufficient return on investment for Symbotic stock investors. Nevertheless, here is my forecast. You saw the different scenarios that need to happen in order to get a solid return on investment, and you saw the risk on the downside if the forward PE was to decrease. But I'm still curious in hearing your thoughts, as I always am. I pay close attention to the comment section, so I'd be curious to hear what your thoughts are on this stock price prediction. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.